Hey guys, Vulcan Trader here. Gonna just do another market update video. Sorry I didn't post anything Friday. I was just kind of busy, but I didn't really do too much anyway. So as far as AMC, this puts didn't work out, obviously. Yeah. So I was. What is this thing doing this? All right. Screen's freezing up. Stop it. There you go. Oh, let me put the pointer on. There you go. Okay. So I was trying to short it right here, and it obviously bounced, and then I closed it out, and then I tried to go long, I don't know, somewhere about here after that, thinking, oh, maybe actually it's going to break this line here, but then it crapped out on Friday. That's pretty much what happened. So, but I'm not in AMC at the moment. It's just too dangerous for me to hold long term, just because it could gap down a bunch, and already made some money on it, but lost some getting chopped here, but I still have some gains. But yeah, if it broke like 65 next week, then yeah, I could buy it back or something like that. It's a more of a shorter term play. It's not something I believe in the fundamentals would hold long term or something, but sorry apes on that if that's offensive, but that's just my opinion. So, but anyway, as far as that, I'm still holding 50% crypto allocation long term. Bitcoin's dropping below these moving averages here, but like I said, if it crashes and goes lower, I'm gonna go, buy it. Maybe we'll get down to 20K if we have another big crash, and then I'm gonna average down. My cost basis will be here. Then I'm gonna in all these BitW, BitQ, OBTC, ETHE, GDLC, and MicroStrategy. As far equally weighted is what I was doing, but I actually dumped my BitQ Friday, and I bought MicroStrategy instead. It's still fine if you're in BitQ, but I'll do a video on why I did that, why I think MicroStrategy is better. I could be wrong, but I'm gonna make another cool video on that, talking about it. But anyway, as far as UWMC, I was doing too much short-term stuff, only stuff like really AMC that's just really rocketing. You probably use the 10-day moving average on. I'm going to use like the 20 or the 50, wait till this gets going better before I decide that more. But it's still holding up, and it's going up even though it's having some pullbacks here. But yeah, whenever something goes on a run, you got to give it some time to figure out what moving average it's going to use. So AMC started taking off. It could have pulled back and hit the 20 here. Maybe it would go like this, but it was respecting the 10, so it hit it here, but then bounced off of it. You could wait till it hits it and then see if it reverses and put a stop below that right after if you wanted to. But anyway, you get the point. So it's you have to figure out how fast the thing is moving, give it some time to get moving before you figure out which moving average you want to use. So that's kind of what I'm doing on UWMC, on ACAD. I try and hold them a little longer. Not move around as much. I still like these. And then as far as Wish, I was gonna say, give a little synopsis on my thoughts on this. So it's had a big downtrend. It broke the 50-day moving average, and then we got a flag here. If you can see that right there. Same thing on UWMC. This is, I would call, this is a low type flag here. It's after you have a downtrend. It starts to turn back up, and then you get, there's your pull. There's the flag. And then I got the same thing on Wish, basically. There's the pull, there's the flag, and this actually one of my favorite patterns, or if not my favorite pattern. It's the most powerful. I think I talked about this on another video, but anyway, this one's a little weird, and it has this big red bar here, so maybe it's not as good because someone was dumping a bunch of stock right here at 14. So if we get up to there, that could potentially happen. But then if maybe they already dumped everything and they're out of it, in which case it'll continue. So you don't know that. We'll see when it gets there. But anyway, but as far as fundamental analysis, this is something, just a real simple method that anyone can use. I'll do book reviews on both of these at some point, but talk about what Peter Lynch, it's One Up on Wall Street, and Chris Camillo's Laughing at Wall Street book. It's basically just talking about how you as a normal person, whatever your typical American is buying or using, and as soon as you see that trend start, you buy the stock. And it's really as simple as that. Whether it's Monster energy drinks when they were first coming popular, it was a huge one that lasted for years, that trend, or Crocs shoes whenever everyone started buying those. Maybe a shorter one, but it lasted, here we'll probably pull up that, but Crocs. That was when I was in college. But let's see, pull back here to Crocs. So Crocs actually doing really good now. Shoot. But anyway, go back to here. But I mean, you had a good run from, well, oh, that's after the crash. Right here, I think was Crocs got popular 06, 07. I mean, see that run? That's pretty sweet. And then you gotta have some way to get out of it or know when to get out. But anyway, Wall Streeters actually don't know what's going on in the general public, so you actually have an edge. I mean, before it hits the earnings or anything like that, you'll see it in whatever your friends, family, whoever are buying. If you always think, oh, is whatever they're buying, is it publicly traded? If it is, then you can buy the stock. Like if someone that you know never owned a gun before and all of a sudden they're buying a gun, then you buy some Ruger or Smith & Wesson stock, for example. But that was probably shorter, maybe a month or two only, or even a couple of weeks sometimes, but that does happen. So anyway, I had a friend of mine his father-in-law was buying stuff off Wish.com that he from some Facebook ads or something like that, and I'd never heard of it before, and then I mentioned that, and my wife had heard it, and apparently buying more than he needed to, so that's good. So you're getting people that are buying a bunch of stuff from them, so maybe that's what's happening here. Stock finally bottomed, they're getting some sort of traction, people buying a bunch of stuff, and so it's going to go up, and maybe it'll go like this. It's from this could be the bottom of an IPO base, so it IPO'd here apparently, and downtrend, and then it'll make a cup right here, and then it'll have a handle and go even further actually as possible. So that's kind of the analysis on Wish and how you use that's just real basic fundamental analysis using your knowledge of a normal person being on the ground floor, what's happening in life and what people are buying. Just pay attention to that and you can make some money off of it. And then so as far as the general market, the growth stocks actually don't look too bad at the moment now. I mean, they could go either way, but I don't see any major crashing. It looks like we could, like Crowd's doing good. Fastly, it's got a little reversing, got a little flag here. Maybe it pops up. That they're still in their ranges, various places of those ranges, but not really breaking out of the ranges, if that makes sense. The question is, will they break out and go up? Like Palantir actually looks pretty good here. Could go up, but even though I don't like them because they're pretty much the NSA at this point and monitoring us, if you're listening, Palantir. And Tesla, maybe I'm wrong actually. Tesla, maybe it's not bearish, maybe it'll break up here, but it's at the 200-day moving average, could roll over this way. Hard to say, but anyway, growth stocks look okay, but thing to be worried about is the indexes are not looking good. So NASDAQ's looking okay. It hasn't really turned over yet, but it was lagging kind of the SPY and Dow Jones recently for whatever reason. So it's kind of where the SPY was a few days ago. Now if you look at the SPY or S&P 500, it's right here. And then if you look at this is like a giant bear flag wedge pattern here. Draw a line there from the crash. And anytime you get something like this, and so we had a crash, we get a reversal, broke the all-time highs. But anyway, it's kind of wider, looser, and this little tighter, and then once you have the full tightness in the pattern, it's going to break one way or the other. It could go this way, but whenever I should have taken maybe those SPY puts or something Friday or the day before, Larry Williams trim it. It's still probably plenty of room for it to do it, but if you look at, we could get a further drop. Let's see, maybe we'll probably get it back down at least to the high here. Usually whenever you get a breakout through the all-time high here, you'll retest supports. I mean, we got maybe an 18% drop coming here possibly. And then the Federal Reserve will get scared, step in, the talking heads will come and say they're going to print more money to hold up things and not raise rates or whatever. Could be what's happening. Maybe the markets are scared because of that, and this is right at the beginning of it. But the NASDAQ's holding up, and then which is more heavily SPY has about half Apple, Google, Facebook, Amazon, but then I need to add Facebook in here. Do I have it in here? Yeah, there it is. So there's Facebook. Maybe it's rolling over. Netflix is always kind of sort of one of the FANG stocks you have in there. Just look at the ones that are in that index. Amazon, Google. Google's not looking. The same thing. So that pattern there. I don't know if you see it. It's similar. That big bear flag, but anyway, anytime you have a wedge like that, it's more likely going to break the opposite direction. So see, it's slightly pointed up, so it's more likely to break to the downside. And if you have one that's pointed down, it's more likely to break up. It's not guaranteed, just the probabilities are more than that, just because that's what's going to fake out the most number of people. And that's why that happens, is because more people are long right now than there are short, if that makes sense. Simple as that. So it's more likely to go down because there's not as many buyers. That's why things happen that way. Why the market goes the opposite direction once it completes the pattern. If it's sideways, then I'd say it's 50-50. It could go either direction, something like that. If it's a sideways pattern, like Wish maybe, or it's a flat top. But anyway, so be careful. We could have a drop here, and if I get stopped out of some of my other stuff, like my non-crypto stuff. The crypto, once I bought that, I'm holding it because I know we're gonna have another leg up by the end of the year, or I feel pretty strongly about it. I don't know for sure, but yeah, the UWNC ACAT Wish, I'm not holding AMC, I'm just still watching it in case it gets another 100% run. I want to be in that, but yeah, and then the crypto, I'm gonna average down. If we have another crash, I'll probably get stopped out of these others, and then I'll put all that money into crypto, average down, hopefully around like 20K is where we could potentially go. That sounds scary, but yeah, and then I'll do a video on why I'm buying MicroStrategy over BitQ. And like, subscribe, throw some comments in there for me, help me out with the YouTube algorithm, and God bless, have a good day, live long and prosper.